Hi, welcome everybody. Thank you so much for joining us today for our Q5 Survival Guide webinar. We're going to tackle how to optimize inventory and cash after Q4. And this webinar is hosted by ConnectBooks and Descartes Finale. So just to introduce ourselves, my name is Colleen Quattlebaum, and I'm the Director of Marketing at ConnectBooks. And joining me is the founder of ConnectBooks, Nachman Leeser. Say hello, Nachman.
Hi.
And Madison Kishen from Descartes Finale. She is the partner program manager based out of Savannah, Georgia. Hi, Madison.
Hello.
So I'm based in Richmond, Virginia. Nachman's in New York. A lot of us on the East Coast had a lot of ice and snow this past week. So we're definitely in the Q1, January, February, winter timeframe. But today we're going to really be talking about how that relates to you as an e-commerce seller. Because Q1 is essentially, that post-peak season, post-holiday timeframe, which we consider the hidden quarter or Q5. So our discussion topics today is going to be, we'll cover why Q5 is the hidden quarter, how to reset inventory and books after the peak holiday season. We will talk about how Q5 inventory and accounting decisions that you make now impact your year going forward, and how to calculate your true return rate and profit by SKU. And then we'll also share some tips to make things a little bit smoother and minimize that Q5 chaos next year. So we'll go ahead and jump in and get started in just one moment. I do just want to cover a few housekeeping items. We are recording this session, so we'll send out an email afterwards so everybody can watch the replay, or you can feel free to share it with anybody else on your team that might benefit from watching this. And we are collecting questions all throughout the webinar, so feel free to enter your questions in the Q&A panel, and we'll be sure to address those as they come up. So without further ado, we'll go ahead and get started. So what is Q5? If you have not heard this term before, we just want to address what we mean by Q5. Many of you are probably feeling a lot of chaos after the holidays. So Madison, help explain what we mean by Q5. Why is this such a muddy and chaotic time for sellers?
Yeah, thank you, Colleen. So when we say Q5, we're talking about that period right after peak season. So usually January, February, where sales start to slow down, but those operational messes start to show up. Returns start hitting, inventory errors surface, accounting finally catches up with what really happened in Q4. And Q5 is the time to kind of reset and go from that reactive mindset that we had in Q4 to the proactive mindset in Q5 with, adjusting processes and changing things to make sure that we don't, have run into this chaos again.
Great. So yeah, hopefully most of you probably who registered for this webinar are feeling that chaos right now. So hopefully you can relate and get some good tips from Nachman and Madison during this webinar. So Nachman, what do you see in terms of accounting pain points this time of year?
So one of the biggest struggles that we're seeing with a lot of sellers, and it's something that doesn't really get addressed pretty well, and the proper way to say it is I would differentiate between profit and cash flow. So the challenge is that a lot of sellers are very busy much checking their profit. Like they're constantly looking, okay, how much money am I making on this product? Now, there is a lot of great tools out there that will help you show your profit. Like, for example, ConnectBooks has a tool, Seller Cloud has a tool. Like, there's a lot of different tools out there, and there's a lot of other tools that will, let's say you sell a product now for $100, you pull down, let's say ad spend, FBA fees, let's say 50%, and then you stay over at $50. And then let's say product costs you $40, so you made $10 profit. There's a lot of good tools out there that will help you do this calculation, and then you can understand. The challenge that a lot of sellers have been facing was more about understanding their actual inventory. Now, what I mean is that, like, I'll just give you a little example of a story we dealt with a certain customer. We were working with a customer who was selling on Amazon and other marketplaces, and their yearly sales was $22 million. Now, after all the Amazon fees plus their overhead, payroll, rent, they stayed over with net income of 1.4 million. So when they look at their profit tools and they look at all the reports, they're showing beautiful profits. They're showing nice margins. They have a lot of their overhead is okay. They have a net income after the owners pay, meaning to say the owners were taking W-2s. So after the payroll, after everything, they stayed at 1.4 million. So originally I would say, okay, it's a nice sized business, 1.4 million. You should have now place for distributions as well. The challenge was that in the bank, there was no money. Every time it came to pay a vendor, it's a nightmare. Busy chasing, trying to pull every dollar they can. So the challenge is that you want to get a better overview of understanding your cash flow. It's not just about your profits, but it's also about the cash flow. And that's what I'm saying is that there's a lot of tools, a lot of sellers like look every day at these analytics tools and saying, oh wow, today I made so much money, today I made so much money. Now, the question I have for you is if you make so much money, is it so easy for you to pay vendors? How much time, how much stress do you have when you got to write out that $600,000 check to buy new inventory? Is it just like a wire straight out of your bank account, or you're busy trying to pull every dollar you can, or trying to maximize every line of credit or credit card you have in order to pay the vendors? So we were working with this client and we were facing a big problem where they basically were so profitable, but there was never any money. Now, when we did a proper analysis on their account, what we ended up finding was that they had a lot they had inventory. What happened was they had inventory sitting. So the challenge that happened was in the beginning of the year they had an inventory value of 3 million. Throughout the year, they purchased a ton of additional inventory and they also sold a ton of inventory. But at the end of the year, they had $6 million left. So what happened was beginning of the year, you had 3 million, end of the year, you had 6 million. So that means to say that they had an increase of $3 million of inventory that never sold. Now, where did they get that money from? Where did they find it? The answer is that the 1.4 million in profits they made went straight back to inventory. So what happens with a lot of sellers is that they're so busy like constantly looking at the profit. One of the things they don't understand is how healthy is your inventory moving? And that's really where one of the things where, ConnectBooks helps you out a lot. And the idea is more to understand the inventory age. So what happened with this client, they start off because they weren't having enough cash, they were they were complaining, trying to understand. So we did analysis in the business and we showed them that basically you increased your inventory $3 million. So then the next question that came to us, so like, okay, so tell me which product we bought that it's laying here more than 6 months or 8 months. Like which product is tying up my cash? Point is that inventory is an asset for the business. When you buy inventory, it doesn't go into your P&L. It stays on your balance sheet, and it's not an expense for the business. It's an asset. When the business sells it, that's when it gets transferred from an asset to an expense. So the challenge is you don't see that money that lays in inventory. If that money keeps on going up and up and up, you won't see it on your P&L. So you won't know that technically on the books, it's not considered losing money, but on your cash flow, you're going to be very tight. From a cash perspective, it's drying up your cash until you sell that inventory. So we worked with the seller. We were like, hey, you have additional $3 million of inventory this year. I said the goal is to start off with 3 million and end with 3 million, not to start off with 3 and end with 6. So they're like, okay, so can you tell us which product has been sitting around there, which product hasn't been selling? And we had no visibility of that. So that was this story is like 3 years ago. But fast forward today, where one of the things that ConnectBooks recently we've been very heavy about is understanding the inventory better. Now, with having the proper analytics on the inventory side, we're able to show you your inventory by age. Now, when we say age, we don't just give you the quantity, we give you the dollar value as well. So, for example, if you're carrying an inventory worth $1 million, the question is how much of it is like in 30 days, 60 days, 90 days, 180 days. Like you want to take your inventory and break it down by the amount of days it's laying in stock, and that will determine the health of the inventory. And when you look over, oh, this inventory is laying there more than 6 months, then between me and you, that's garbage. You got to start liquidating it. Sometimes it doesn't pay to wait till you sell it on Amazon. If you can wholesale it or get rid of it somewhere else, that's going to help you out a lot. So the goal is really you want to try to understand your inventory, which your inventory impacts your cash flow way more than your profit. So, step one is to be profitable, and that just goes without saying. But step two, it's not just being profitable, it's also being cash flow positive. And you want to be cash flow positive, you want to make sure that your inventory is not draining your cash. You want to make sure that you constantly have enough inventory, meaning that your inventory is not sitting around. And if it is sitting around, you want to try to, find a way how to liquidate it and how to, get rid of it pretty fast. what I would want to give our audience is I want to give our audience a challenge. And the challenge that I want to give them is that take your books from the month of December, or do it maybe for the whole 25, and ask your bookkeeper, how much was cost of goods sold? Right? So let's say, for example, let's say your cost of goods sold for the whole year was $1 million. Okay. So if you take $1 million, now cost of goods sold, I mean, is not how much your sales were from Amazon. Talking how much was the cost, and it's not also how much you purchased. Talking throughout the time, right? So let's say I did $4 million in sales. Let's say Amazon fees is 2 million, and let's say the cost of the material. I mean, the cost of the products I sold, let's say were $1 million. Okay. So let's say you did $1 million, you have $1 million worth of cost of goods sold. What you should do afterwards is take that $1 million, divide it by 12, which is going to give you $83,000 a month. Then take that and let's start off with a 3-month cycle, meaning to say, we obviously, if you haven't been doing this in the past, it's very likely because most people don't talk about it. But what I would say is the best way is to have inventory enough for 30 days. Now, what does it mean enough for 30 days? Meaning you should buy exactly enough for 30 days and replenish. Now, with FBA, it takes longer times to check in. So let's say 1 to 2 months. I recommend if you haven't been doing any aggressive inventory planning, like meaning not planning to have stock, meaning aggressive planning means to say not to overstock. You don't want to overstock, you don't want to understock. So in that case, I would recommend starting off with a 90-day period. So 3 months, 90 days. So if you take, let's say you do $1 million a year in cost of goods sold, let's say in 25, divide that by 12, it's going to give you $83,000. Take that number, times that by 3, it's going to give you $250,000. Your inventory should not be above that. If you have inventory worth $450, then you have $200,000 that's stuck that you want to try to liquidate. So what I'm saying is what I'm leaving the audience with a challenge is basically take your cost of goods sold for 3 months. So I said if you don't really, December is a hard number because December your sales are probably higher, but that's what I'm saying. Take 3 months, right? If you want to do it on the year, that'll probably be better. But just take 3 months, and your inventory value should not be more than you have in 3 months. If you have more than that, then you have a challenge, and that's really where you want to start setting up good analytics in your inventory to understand your inventory age, and that's how you understand better your inventory health.
Yeah. So inventory and accounting matter more than ever in Q5 to evaluate how you did for the year. Take a look at that inventory age, take on Nachman's challenge. And Madison, from an operational standpoint, like what are some of the challenges that you see this time of year when it comes to inventory from your perspective?
Yeah. From the operations side, Q5 is definitely when those cracks start to show. So a lot of things that we see are negative stock, oversold SKUs, bundles that maybe weren't tracked correctly, or items that weren't costed properly. I feel like a lot of brands, feel pretty confident in December because orders are flowing in, but in January you kind of realize where you might have been flying blind. So we have customers, who are exhausting all their resources in this Q4 time. They're, losing warehouse workers, everybody's working overtime, people are having time away from their families, and they kind of realize that they can't continue like this. They start looking at bigger consequences. What's the reputation? What's the risk? What's the what are the brand reputation risks essentially with that? And getting deeper into that, you look into your capital being tied up, as Nachman was saying. If you're spending too much money buying inventory that's not moving, that's money sitting there in product that should have been spent elsewhere on faster moving products. Fulfillment errors, labor shortages, overselling. Are you, selling, having to cancel orders because you don't have the inventory to fulfill them when, your systems are kind of disconnected? And I do have an interesting client story to share as well. So we had a client who was selling pretty consistently, no red flags. But when we looked closer, we found a pretty big problem. So their products were priced wrong, essentially. They didn't have a clear handle on their margins or their true cost of getting that inventory. So every single sale was essentially losing them money. And the worst part about it is it went on for like almost an entire year before they realized they were bleeding in this way. But that kind of brings us back to that the importance of ConnectBooks and having kind of connected systems, because with ConnectBooks and your inventory system, Finale, something like that, you're able to determine your margins, determine your profits, so you're not incorrectly pricing products that you're losing money, or you're not spending money on products that aren't your fastest movers. But essentially we were able to uncover that margin issue and fix the pricing and stop the bleeding. But it is, it was an unfortunate, byproduct of kind of not keeping their costs or their inventory so tight where they were losing money for almost a year and didn't even realize it.
Yeah, so that's definitely all the chaos in Q5 can lead to a lot of profit leaks. So that leads me to my next question, Madison. What should sellers do now to optimize their inventory? What suggestions do you have to help clean things up in Q5?
Yeah, so my suggestions are definitely centered around visibility. So a lot of our sellers don't really have connected systems. They have, inventory managing in one place, accounting in another. Connecting all those channels really gives you that holistic visibility. So, for example, with Finale and ConnectBooks, Finale can sync information to ConnectBooks. ConnectBooks can show you your profit, can show your inventory aging, can show you a lot of good information that you might not have had, visibility into if you didn't have your systems connected. Another big thing is reordering accuracy. So, like Nachman was saying as well, ordering for 30 days of stock, using an inventory system to help you with replenishing 30 days of stock instead of just kind of flying blind and ordering, when you see inventories low on the shelf, using a more sophisticated reordering kind of algorithm to make sure that you are replenishing when you need to and not over ordering stock that you can't essentially sell. So having accurate reorder points, based on velocity, so you're not overbuying slow movers. Another thing is warehouse processes. So making sure, labor is used efficiently, your warehouse workers are trained and in order processing and order picking and fulfillment to reduce errors in that way. And then again, utilizing like ConnectBooks for tracking profitability, SKU optimization. You can organize this and in conjunction with your IMS to determine which your highest margin SKUs, and those are the ones you want to keep buying and keep selling. But yeah, I did want to kind of pose a question over to Nachman. How often do you think customers should be doing like inventory valuation from your perspective?
Well, number one, the first thing with inventory evaluation is you want to make sure it's accurate. So if you don't have a good inventory system or you're running through spreadsheets, then don't even talk to us. You know,
Right,
There's
right.
it's super important. How many times I've been to companies like where they just, don't have nothing in place or something like so. So I would say first thing is even before we get to age, like first thing is having an accurate inventory. What is at FBA? What is on the way to FBA? And what's in your local warehouse or 3PL? Having those numbers at your fingertips. Without a proper inventory system, I haven't seen the way how to do it. Especially with Amazon, there's so many moving parts. These inventory is
Yep.
scattered all over. So first thing is you want to get it, you want to have an accurate number. You want to have a proper system set up in place. Now, what I have seen is that once a person has like a proper setup in place, like once a quarter, you can definitely do like a good cycle count. So when it comes to
Mhm.
cycle counts, there's different aspects that you want to do. You want to hit FBA in transit, and then you also want to hit the local warehouse. So, depending on the system you use, but FBA should be pretty simple to match back. And so should in transit be pretty straightforward. And then the local warehouse is where you want to start, where you'll have to manually go out and do it. So most of the times, what I've seen is if you have a good system in place, and what I also try to avoid is having like big adjustments. Like if a system is showing 100 pieces, give or take 10%, right? But you don't want to have like a 50% adjustment when you do an inventory count because that means that something is not adding up. So generally, like get a right valuation. Once you have valuation, I'd probably say once a quarter. Once a quarter is like on the safe side. If you feel you need more often, you could, but once a quarter, but you shouldn't also be spending too much time on these inventory cycle counts. Like you shouldn't be spending like 2 days. It should be something that should be done in an hour or two.
Yeah, I totally can agree with that. Something we've actually seen at Finale is when you do have a true inventory system in place, you do end up reducing the amount of cycle counts you're doing per year because you are theoretically keeping better track of your products. Totally makes sense.
Good,
Yep.
thank you. And just as a reminder to the audience, feel free to share any questions in the chat or in the Q&A, and we'll be sure to address them throughout. Anything related to this time of year, any chaos or inventory or cash flow questions that you might have, we'd be happy to address them. All right. And so then the next question we want to tackle is, how can we make the process smoother going into Q5 next year? What can you do now in terms of what decisions or systems to use to really minimize that chaos going forward? So, Madison, do you want to take this one first?
Yeah, so I feel like it makes a lot of sense to kind of work backwards from your Q4 experience and see where you were getting maybe the most complaints that are risking your brand trust. Was it, overselling? Was it pricing issues? Was it fulfillment delays? Looking at those complaints and, using that with brand loyalty to kind of drive the process forward. So using that to determine, what is the next step basically to mitigate this going forward. But moving forward, if you don't have any softwares or you're not leveraging kind of the integrations or tools that you currently have, I would say the most important thing is that connectivity, that being able to integrate your platforms, your accounting, your inventory to ensure that everything is in sync all the time, not just, at the beginning of the year when, it's time to file taxes or time to clean up, your books. It should be happening all year round when you're, every month when you're selling and purchasing inventory.
Absolutely. Any other suggestions that you have in terms of solutions to reduce that chaos going forward in Q5 next year, Nachman?
So one of the things that I really like a lot to do now that we touched on our previous topic with inventory age and discussing like a lot of tied up capital, is we're taking actually a very interesting twist on when it comes to understanding profit. So there's a lot of, different scenarios where you want to really, dive deep into your business. Now, sometimes you can see a product that's, let's say, selling and you're hitting 10% profit, and you could think, wow, this is such a good product, I'm making money. But the answer is you're not. Why? Because let's say your overhead requires you to be at a 20% margin. So really you're losing 10% instead of making 10%. One of the best ways is first thing is understand your break-even point, right? So if you're a one-man band and you're just operating everything yourself, I mean, I haven't seen anybody like just have like minimal expenses every month, and this works in my business as well. We always have these one-time expenses. Oh, we didn't expect this month, or we're going to a show, we're having this, we're having that, right? And it happens in every business like that. And especially if you're looking to grow, you'll always have those one-time expenses. You'll always have those additional expenses that are constantly going to show up that you didn't expect. So the best way is to really have a proper set of books. The reason why I do want to use QuickBooks is because QuickBooks reconciles back to your bank account. And I always tell people, how do you know your books are accurate? The way you know your books are accurate is because you do a bank reconciliation. Now, if every dollar that comes in and goes out goes through your bank, then we know, okay, so you reconcile the bank, so every dollar in and out is properly recorded, then we know your financials are correct. So first thing is you want to make sure you understand what is your break-even point. The break-even point would require, what I like to do is understand what your fixed overhead is and then break it down. So for example, if you're a little bigger company, you already have like a little bit of a warehouse or something like that, let's say your overhead costs you $50,000 a month, right? That's all your fixed expenses. Now, let's say you sell products on Amazon after all the fees, after the cost of product, let's say after ad spend, you're at 10% margin. That means to say when you do $500,000 a month in sales, you'll net $50,000, and that's going to just be enough to cover your overhead. So basically, you're going to be breaking even at 10%, at a 10% margin, you'll be breaking even at $500,000. So what you want to try to do is understand, okay, so if this is where I'm breaking even, then either I figure out how to move my margins up to 20%, or I figure out how to deal with my overhead, or I leave the overhead the same and, try to expand the sales. But you have to have some sort of strategy in place. And we have worked with a lot of clients where we have, helped them identify these metrics and help them put these stuff in place, which afterwards, help them be able to grow the business. And then there's another interesting point is that once you understand what your margins are, the question is, what is your return on investment? So what you want to do is you want to focus on products that have the highest return on investment. Now, return on investment margin are two different calculations, right? So if I buy a product for $20 and sell it for 100, I have an 80% margin. But my return on investment is 500 because this $20 is bringing me, sorry, it's 400% return. Basically, because this $20 is bringing me 4 times my money. So this $20 brought me $80 in profit, which brought me 4 times my money. So what you want to do is you want to keep on buying products that your return on investment is the highest, means they have the highest ROI, not the highest margin, but the highest ROI. But then there's another challenge. The next challenge would be, what if I were to give you $100 and then that product, let's say if I were to give you $100, you could buy one product that sells for 250 and one product that sells for 120. So the product that sells for 250, ideally I would say like, which one of the two products would you buy? The one that sells for 120, the one that sells for 250. Ideally, I would say I would buy the product that sells for 250 because I'll make more money. But then comes a different challenge. What if I tell you that that product it takes you a full year to sell, versus the product that goes for 120 takes a month to sell. So if I buy the cheaper product, I can flip it 12 times versus the more expensive product, I'm not making so much money. So where ConnectBooks is where one of the features we're actually going to be releasing soon, meaning it's already on our beta service and a private beta, but it's going to be released soon, is going to be ROI times your turnover. So what you want to do is you want to understand, okay, so let's say my ROI is you want to take your products at the highest ROI, but also the fastest turnover. Because in the other case, if a product takes a full year to sell, the ROI is good, but the turnover rate is not good. So you want to try to understand like where you're making the most money, where you have the best return on investment, and where you're moving your product. So that's how you should be able to do it. So what I would say is going into 26 is understanding what your break-even point is. What is at what point does your business break even? And at what point are you going to make 20 to 30% net margin? Like, what are those numbers you have to hit? And you have to be really clear down path. Really, the best way to break out your break-even point is something like QuickBooks or similar, which reconciles to the bank, not on a spreadsheet. The challenge of spreadsheets is that you don't have that double-checking system that it's going to match the bank. You don't have a way of verifying it. Also, you could so easily delete like 5 rows and never know about it. Or you could forget to download it
Yep.
1 month and also never know about it. These like so many stuff that can go wrong, and you spend hours and hours just verifying your spreadsheets are right. Versus if you use something like QuickBooks, you have the proper way to set it up. So understanding that, and then analyzing your ROI, also analyzing your turnover. Now, having all this set up is, it takes some time. I would just say it's not a walk in the park. But the first thing you got to make sure is you have the proper system in place. So utilizing something like Finale, utilizing something like ConnectBooks, especially that we have integrations where, we sync data across each other and you're able to get a lot of insights. That's definitely going to help you, understand stuff way easier, way better.
Yeah, so the keys, the things that have been discussed is really know your numbers inside and out, have the tools in place to help you understand those numbers, know your inventory inside and out so you can make the right investments on the most profitable items going forward and keep an eye on that inventory age. But then syncing that inventory and accounting systems so that all your numbers are accurate. And so with that, I know you just mentioned that we have an integration. So yes, Finale and ConnectBooks have a seamless integration that many successful sellers are using, and it works really well to accomplish, exactly what we're talking about today, making sure that you can keep a close eye on your inventory and all of your profitability numbers so that you can make the right decisions to grow your business going forward. So Nachman, do you want to talk a little bit about how this works?
Yeah, so the integration that we have with Finale is very seamless. And the thing what I like about it is like we spoke about a lot of stuff, and we also spoke about a lot of things that are hard to do. Now, it's not easy to be organized. I mean, some people have it in their DNA. They're like sometimes too organized, but generally business owners
Yeah.
are not organized. They're usually all over the place. So, you know, you want to, what happens is, and I would say like I can talk from the ConnectBook side, but the biggest pain in ConnectBooks, and I believe the same works in Finale as well, is getting set up, right? Somebody comes, you ask them, okay, so how have you been doing bookkeeping? Oh, we do it manually, or oh, we never do it, or like we just lump sum whatever comes into the bank, like completely messed. Or it's like, let's say somebody comes to Finale and says, how have I been doing it? Yeah, I know in my head, and that aisle is like 5 pieces, and that aisle is another 10 pieces. So like you can't plug a USB in here and like pull everything out. But the challenge is getting set up is always the hardest. That's what I've seen. The setup is the hardest. Now, the thing with Finale and ConnectBooks is because of integration, you don't have to set up both. Technically, if you have your Finale account set up, then ConnectBooks is a 5-minute setup, and everything it's basically completely automated. So the idea is that ConnectBooks will retrieve data from Finale on an order by order basis. Why is that important? Because we pull the order ID from Amazon or Shopify or whatever other channels, and then we get that information from Finale and we sync the data across. So the idea is that once you get Finale set up, or if you already have Finale set up, meaning you have your item list set up, they're connected to the listings on Amazon, they're properly mapped across, you're doing the FBA shipments accordingly, you have the whole thing set up, then when it comes to ConnectBooks, it's just a simple plug and play. So you save yourself a lot of time on that end versus having to set up two systems and having to invest a lot of time. So it's very, but I would say for anyone who's already existing Finale user, ConnectBooks is a 5-minute setup. If you have none of them, then you'll have to invest time in one of them setting it up. But even if, let's say, you're using ConnectBooks and you want to, push data to Finale, we should also have a lot of things in place where it shouldn't be that complicated to set it up.
Yeah, and just like anything, when you're running a business, investing the time now in the short term will save you a lot of time and money in the long run. So, and both of our companies have great support staff and teams to help with onboarding and all
Yes.
of that as well. So, and yeah, so then this is what it looks like when you want to take a look at your item costs in ConnectBooks. Those are imported directly from Finale automatically, and they'll show in your P&L reports in ConnectBooks right there in the cost column. So you can see everything is just very transparent. And yeah, anything else that you guys want to add about the integration?
Kind of piggyback on the costing part. So Finale is doing an average weighted landed cost, and Finale is automatically keeping your product costs updated as you receive purchase orders for different prices. So this is essentially keeping everything in ConnectBooks in sync. With this integration is syncing it automatically. I think as often as every 5 minutes. So as you receive products in Finale for different costs, your costs increase or decrease, those updates will get synced to ConnectBooks. So in ConnectBooks, you can immediately see that profitability. Like Nachman said, you're not combing through your spreadsheets, trying to, create complex formulas and pivot tables and all that other stuff to figure out, your profitability when you can let, the tools just kind of sync and do it automatically.
Yeah. So we do have a question from somebody in the audience. How can we get assistance to confirm that our Finale account is set up correctly before we make that connection to ConnectBooks? So Madison, I'm sure your team can help, right?
Absolutely. I was just going to say, yes, please feel free to reach out to our team. We would most likely, get on a call with you and look through your account, make sure your product costs are in correctly, make sure there's nothing negative, just basically do kind of like a checklist to make sure as far as your financials go in account in Finale that everything looks good. And then, like you said, if everything looks good, then we can do that. What Nachman said, it takes about 5 minutes to connect to ConnectBooks. So yeah, our team can definitely assist with that.
Great. Thanks for the question, Letitia. We'll give time for others to ask questions as well. So just before we move into any additional questions, just wanted to offer a special offer as a thank you to everybody for joining us today. ConnectBooks is typically a 30-day free trial, but for everybody joining today, and if you're a partner with Finale or using their tool, or even if you're not, you're welcome to get a 60-day free trial of ConnectBooks. And then we would, of course, encourage you to sign up for Finale as well and use that integration. But just go to connect.com to our website and you can start a free trial. Just use the coupon code Q5-60. This does expire at the end of the month. So if you're interested, please go ahead and get started. Got nothing to lose. It's free for 2 months and our team would love to help you get anything set up. All right. So any other questions or anything else, Madison or Nachman, that you wanted to address or make sure to cover that maybe we didn't get to in our conversation today?
I mean, we definitely dived a lot into a lot of stuff, trying to
We
think
did.
first. Um,
Feel like I guess my biggest tip to everyone here is leveraging the connectivity. So like utilizing the integrations with your IMS, with your accounting softwares to really automate the manual work is, I feel like, is pretty key. With Finale integrated with ConnectBooks, you can easily see your profits and revenues as Finale syncs the costs. And from there, it gives you the ability to make, better educated business decisions on processes going forward instead of spending that time manually reconciling spreadsheets and manually entering updates into QuickBooks. And activity piece, I think, is the biggest tip.
Absolutely.
Definitely the connectivity definitely automates and streamlines a lot, but as I would say, the most important part is just being organized and being properly structured in your business and just know what's going on. So knowing how much inventory you have in hand, knowing not to overstock or understock, and just making sure you have the proper systems in place is definitely, gonna help you a lot.
Yeah. So I have a couple other questions that came in. One is asking, how does the cost work, FIFO or average? So is it first in, first out, or average? So I'm not sure which tool they're talking about here, or if it's both.
So
Well,
with Finale,
sorry.
no worries. I was just going to say with Finale, our costing is an average weighted landed costing method.
So I would just add on that the way our finale works, it's an average weighted method. And they also mentioned before, Madison mentioned before that they have landed costs, but what the way we set up the challenge with average cost is that it fluctuates. So let's say, I also explain to people like the way average cost is some softwares call like a moving average. People understand it better. If let's say I buy in January 100 units at $1, and let's say I sell 100 units and then let's say I sell out the full 100. Now, February 1st, I buy another 100 units, now I pay $2. Then there's no average cost because we know that the cost was already used up. Meaning to say the challenge more is that let's say I buy 100 units at $1, sell 50, now I buy another 100 units, and now the second batch is $2. So now I have 50 units that I bought at $1, 100 units at $2. The question is when I sell my next product, what is the cost? That's really where average comes in. Now, the way it's going to work is that Finale tracks that accordingly. So when let's say a sale, let's say in that case where I buy 100 units at $1, sell 50, buy another 100 units, now $2. Now February 2nd, a sale comes in, let's say my average cost would be somewhere like $1.80, then that's what Finale would record on the back end, and ConnectBooks will pick that up. So the idea is that when the cost fluctuates, that's really where average cost gets complicated, but that's really where ConnectBooks kicks in and it pulls the average cost correctly.
Yeah. And then we have another question on how does the cost show up on the reports? Is it per order or per SKU? So in ConnectBooks, we can get everything down to the SKU level. Nachman, do you want to address that?
Well, we can do it both ways. We have an order report as well. The screenshot you have is just an SKU level report, which most people like to look at, but we do fetch it, as I mentioned before, per order, meaning every single order that comes in, Finale will be picking up what the average cost is, and ConnectBooks will be getting that average cost. So that's what we were getting. So we can do it on an order level or on a SKU level.
And another question, will my COGS be sent to QuickBooks?
So the answer is yes.
And does ConnectBooks have the shipping cost?
So I will have to turn back a second to Madison on this. The question is, assuming that people are referring more to FBM, merchant fulfilled, through Shopify or other stuff. In that case, when you ship through Finale, does Finale track down the outbound shipping on an order tracking number, like an order level?
Right. So when Finale syncs down orders from the marketplace, we do pull in, like if there was any shipping costs paid by the client, we do pull that in when we sync orders from the marketplace.
Right, but let's say if somebody's shipping on a Shopify order and they buy postage through stamps.com, does Finale track that back to the original Shopify order?
Yes.
Okay, so if you guys have that, then we will get it. The answer is yes.
Yep.
Great. And Madison, what is the typical onboarding implementation timeline at Finale?
Yeah, so our average onboarding time is about 4 to 6 weeks. As you can imagine, that definitely depends on the state of your data. So if you're relatively, organized, have a lot of your SKUs, cleaned up, descriptions, all of your kind of item details ready, then, typically that 4 to 6 weeks is a little bit shorter. But yeah, on average, 4 to 6 weeks. And with Finale, you do get assigned a dedicated implementation manager that will help set up your account from start to finish.
Okay, great. It looks like somebody joined us today. Andrew is a new user. So what's the best way for him to learn Finale? Is it to work with their implementation specialist?
Yes, absolutely. Your dedicated implementation manager will be your best resource with getting trained on the ins and outs with Finale. And typically we set up very similar to this, 45-minute Zoom sessions where we share screens and help touch on any of the features that you are looking to learn about.
Great. And then one follow-up question from Letitia. Can you advise the best way to contact someone at Finale to review our setup? Do you have a support email or something that's that I could share?
Yes, please reach out to service, SERVICE, at finaleinventory.com, and our team will be able to respond and get something set up so we can review your account.
Great. All right. Well, it looks like those are all of the questions that we have at this time. But feel free to reach out to myself or Nachman or Madison. You can find us on LinkedIn, and then any of our just general contacts on the website. And we're happy to help you if you have any questions about ConnectBooks or Finale. But we wish everybody a great 2026 and hope everybody has a good turn of the holiday season next year with some of these additional tips. And if we can do anything to help get any of these tools in place, please feel free to reach out. Thanks everybody for joining. Thank you, Nachman and Madison.
Thank you as
Colleen.
well.